Hello, everybody. My name is Nicole and I'm a technical analyst and private investor. And this week, I'll have to be honest, I've struggled to find something really useful, interesting, chart-wise for you. And the reason is that it's a very important time of year. Yesterday was the end of June, the halfway mark through what has been a very difficult year so far for so many. And you have to try and sort of take stock of where you've come from and where you might go to. So first of all, I'm going to use quarterly charts, i.e. 3-month intervals for each candle. So that's to one side. But the other thing about this week that's very tricky is that today, not only is it the 100th anniversary of the Chinese Communist Party, and I've been watching some of the clips of the spectacular displays they put on in Beijing. President Xi, absolutely spot on with a Mao-style grey, tightly buttoned suit. I mean, he looks fantastic. I mean, his PR really is very, very good. It's also Canada Day. And then tomorrow we've got the US non-farm payroll, unemployment and wages data due, which is considered the most important US data spot in the month. So everything's much on a sort of like hold. I don't know what I want to do. So let's go to my first chart. This is one that you will all be familiar with. It is the price of gold. It is spot gold, US dollars per ounce. And this is a quarterly chart. And as you can see, quite frankly, over the last 4 quarters, we've made precious little progress. In fact, we're back to where we were exactly a year ago. More worrying is we're back to where we were in 2011, which was at that point the record high price for gold in dollars. So, I mean, I don't know about you, but I don't have 10 years to wait to go nowhere. What's also a little bit worrying on this chart is that I've marked out some slightly, not disastrously, but slightly negative candles from April to June. We've had a shooting star, as we did at the record high. We then had a doji, which is indecision type candle, and then we had a big red Marubozu. That's a bearish engulfing type candle. That is bearish. On the bottom, you see the RSI. Gold is still overbought, and the MACD, while positive, the histogram is coming down faster than the prices are coming down. So all of this, I would say, looks not disastrous, but slightly top heavy. And if this is going to go on for much longer, I just don't have the patience to wait for it to get somewhere. Now, moving on to my second chart, and this is the price of thermal coal on the Zhengzhou Futures Exchange. We don't have much history. This is not an active contract. But I think you'll agree with me that since all the razzmatazz about the signing of the Paris Climate Change Agreement in 2016, the price of this has gone up and continues to go up. The price of some coal mining companies are on the way up as well. I mean, is this greenwashing? So much jargon and ESG and all the rest of it. My final chart is again one that's familiar to you. It's the price of lean hogs. We've had a massive volatility over the last 4 quarters, highest ever, and now we've seen a massive spike high. I think this is time to pull its horns in. I hope to see you next week. Good luck, everybody, and have a nice 4th of July.